today I'm so excited that we have Mark Hicks to join us and going to be sharing with us about commercial property insurance policy, what kind of mistakes that we should avoid, and how to maximize coverage. Mark is from Farmers Insurance. Maybe you can tell us a little bit about your background.
Yes, I've been in the insurance industry for 14 going on 15 years. I mean, it's something that I stumbled upon, 14 years ago, that it was never something that I said, oh, I'm gonna, I woke up and said, hey, I'm gonna be an insurance agent. But I ended up growing to love it, and I'm just a very social person. So for me to be able to talk to people every single day and kind of get to know them and understand where they're coming from, it really does excite me. So
That's
um,
awesome. Well,
14
you
plus,
gotta have passion in order to do what you do, really.
definitely. So yes, I'm going to talk today about essentially avoiding common mistakes and maximizing coverage. Um, Insurance is it can be very difficult. So having someone that actually can kind of break it down into a simplistic form makes things a bit easier. So
Mhm.
let's get into it. Kind of a quick agenda. The intro. We're going to what we insure in my agency. And you kind of more understand what I mean when I say proactive, not reactive. The location and use of the buildings, common mistakes, of course, and preventative measures. So a little bit about myself. I'm a Bay Area native, born in San Francisco, raised in San Jose. My second home is 100% Chicago. I mean, outside of my sister and I, being born out here, my entire family is in the south side, west side of Chicago. So Chicago has my heart, especially the food. Uh, Graduated from San Francisco State with a bachelor's of science in business management. Um, Married, as you can see on the left. I'm a goofy person once you get to know me. So all my pictures look like that. And my fur daughter is named Marley. Originally, I thought she was very calm and didn't realize that, when she was neutered, she was on medication. And then once she wore off of that, she ended up being a crazy dog. So training, she's better now.
Is it just
um,
like the movie Marley, Marley and Me?
exactly. And my agency is based out of South San Jose, for those that don't know, in Almaden Valley, off Camden Avenue and Almaden Expressway, like right behind the Bank of America on the corner. What we insure, I'm a farmer's agent, but also connected to other insurance carriers. So I like to call us a one-stop shop because we literally insure everything. And then kind of go into the multi-unit buildings, 5+. Um, we insure what's listed here. I mean, apartments, condominiums, townhomes, multifamily, which are included in that same group. Whether in some cases you have maybe an apartment building that just 5 units and the owners living in one and the other ones are rented out. I mean, that's acceptable as well. PUDs and HOAs as far as the residential side goes. At least with farmers, there's kind of a max on 24 units per fire area. Other carriers have different requirements. And subsidized housing programs could be unique, but they are insurable. Also, marinas, docks, or lakefront properties could be included, within the same category. On the commercial side, the retail, the industrial, the office buildings, those are also, buildings that can be insured, given, you're going through a transaction, either purchasing a property or, of course, looking for, another, get at least maybe another second opinion on your current coverage. Be proactive, not reactive. I'll say that insurance is normally the last item on everyone's priority list, unfortunately, until something unexpected occurs. As my father would say, emergencies are emergencies solely because you didn't plan for it. So, let's prepare ahead of time so when things pop up, it doesn't seem like the world is coming down on you. As you can see, kind of the top right, That's a photo from the Paradise Fire some years back. And then even the flooding on the bottom right, that's for those that are familiar with the Pajaro Valley near, Watsonville, Santa Cruz area, when we had the crazy rains, that entire city ended up flooding because the levee broke. And, sad to say, it was something that the city knew was faulty, but just never fixed it. And, they ended up having, tons of people that, their homes were inhabitable. And it was a very sad thing. I mean, they're still repairing it. It's going to be millions of dollars that are going to have to go into rebuilding that place. I mean, it's a huge farm town. So a lot of farmers have lost a lot of crops and, properties. So, it definitely, these issues and these catastrophes have to be considered when looking at insurance and the price points. I mean, so quickly, the annual inflation rates have, raised close to 8.3% in 2021 to 22. I mean, this completely affects repair, replacement, and the rebuild of properties. Construction costs have gone up by 26% plus or minus. And, in 21, I mean, not even counting 2022 and, now 23, 116 billion has been paid out to natural disasters. So, that gives a lot of good info and insight on, just how many things need to be repaired all at once. So what matters, the location and the use of property. And for real estate, I mean, that's really the thing that matters: location, location, location. So on the insurance side, I know on the real estate side, it's more of a, kind of market-based approach, looking at their price points. But when it comes to insurance carriers don't necessarily care about what someone else is willing to pay for the property, or they care about how much it actually costs to rebuild that particular building. So location is huge. They base it off of the wildfire score, and that is essentially, you can kind of look at it as you having a driver's license, and the more tickets and accidents you get, the less likely an insurance carrier is going to want to take a risk on protecting you. So it's the same thing with properties. If they know that there's a particular home that's had, 4 claims in the last 3 to 5 years, that especially if it's related to wildfire, more than likely the price is going to be ridiculously high, or they're just going to say, we don't want to take on the risk. And, now you're searching around for carriers. Is the property in the designated flood zone? FEMA is the biggest flood insurance carrier, out here. And, if the property is in a flood zone, I mean, one, if you're getting a mortgage or doing some type of financing, more than likely they're going to force you to get flood insurance. But the thing is that many people don't get flood insurance unless they're forced to. And since the recent flooding, we've had a lot of, incoming calls about, hey, do you offer flood insurance in our area? And, it's a yes in most cases. So it's always something to think about. Is the property on a hill or a mountainside? I mean, that matters, right? Because if there's, mudslides and a history of mudslides, insurers know that at some point, if the rain is really bad, these mudslides can possibly demolish the home. So again, you may be charged more, or you simply just can't get insurance through a particular carrier. Is the property accessible by dirt road or a public street? That matters because of, if there's a fire, if you live up a hill and it's 3 miles up, that just means it's going to take longer for the fire department to come up and diffuse the flames. So that can affect if the property is insurable or not. Of course, the age of the building. No insurance carrier is going to want to insure a old building. That's just simply put. And kind of into that age of the building, the condition of the building, like, is it maintenance properly or not? Also, hazards around the property itself, like trees or power lines. I mean, that affect future claims. The use, is it a long-term or short-term rental? Is it like you have a 12-month lease with someone, or is it just a Airbnb situation? That matters. How many occupants do you have within, one building? Is it subsidized or not in any type of subsidized housing programs? Because those are also insured differently compared to just a typical 5-unit apartment building. Does the owner, as I mentioned earlier, does the owner live in the unit and the other units fully rented by individuals? And also, again, is there a signed lease agreement that's updated yearly? I mean, that's key. Insurance carriers pay attention to that. And if they can confirm that you don't really have a lease agreement signed up, I mean, one, it's in your best benefit to have that. But insurance carriers want to know if you're actually renting the property, to its fullest capacity and actually documenting the rents.
So is this talking about the multifamily, let's say if you have a 20-unit apartment building, do they require a signed lease agreement that's updated yearly? Because most of the leases, they would say that it automatically go into month to month afterwards, after the first year.
And that's fine, as long as it states that. That's
Got it.
perfectly
And they want to see like for every single unit.
right. Right. Because in some cases, there are individuals that rent out properties and, it could be a slumlord situation and they say they have a lease agreement and it's really not there. And the last time it was signed was 2013. They're trying to confirm that that's not the case.
And people, I have to tell our buyers sometimes, like you'll be so surprised how many sellers out there or apartment owners out there just do not have a formal lease agreement, and or they write up their own agreement or terms on an addendum that it didn't even
Exactly.
make sense. It has so much loophole on it that we couldn't even advise our clients to take over that lease because it's just too vague and it's not written correctly. So yeah, we always recommend our clients, if you are really trying to maintain the value of the property, you should hire property managers to do that, to do your leases.
Yeah, exactly. I mean, because not only, is it an advantage to ensure that you can insure the property properly, but also to ensure that there's no huge liability in the future because you didn't have the correct lease agreement written up. So yeah, very important. Some of the common mistakes. I know you all have been waiting for this. uh, Number one, and this is from really personal experience, buying a property before verifying if the location is eligible or ineligible. That's a key one because sometimes, I mean, as we know, especially in real estate, people can get emotional. I mean, especially if you're buying an investment property and you're like, oh my goodness, these are the numbers, this is my return on investment, looks great. And before you know it, you buy the property, sign all the paperwork and determine that, oh, we can't even find a company that wants to take on insuring it. So it's always good to check on that before purchasing, and it doesn't take long. I mean, as we know, the purchase process is way longer than just saying, hey, Mr. Insurance agent, can you just check this address to see if it's insurable?
Yeah, especially I mean for residential market, a lot of times like are probably a little bit easier, but then like for commercial properties, it's important to actually we used to get the clue report, which is yeah to see that if there was any past claim on this property, because if there was a fire just a year ago or 2 years ago and it looks great now because it's all fixed up, doesn't mean that the insurance company is going to insure it still.
Exactly. And I'll get to that in a second too. That clue report is key. Okay. Number two, not insuring the building to 100% replacement cost value. And for those that don't know about co-insurance penalties, especially when it comes to, we're talking multifamily units, right? If, let's say, for example, you have a multi-unit building and I've calculated that really the coverage amount should be $850,000 to insure this whole entire building, for example. But you choose to insure it for 700,000. And honestly, most of the time, there's usually that kind of back and forth because of price, right? Just a price point. But the issue is that if you do insure the property below the replacement cost value, what happens is the insurance company is essentially going to say, hey, since you're not being more responsible in insuring the property to the right amount, we're going to impose a penalty if a claim were to happen and it were to be totaled. So not only are you not going to get the full replacement value, but we're also going to penalize you. You know, some companies, it can be 30%, 40, just for the simple fact that you didn't insure it properly. So it's never a good idea to say pennies, because you can end up, you know, forking out hundreds of thousands of dollars, which you don't want. Number three, insuring the property based on price point, not coverage need. That's a huge one, because majority of the time as consumers, you know, we're looking at price, but especially with insurance, I mean, real estate, like you do have to kind of flip the thinking and look at it as, what do I actually need? Like, what coverages do I need for this particular property? What am I trying to do with the property? Like, what's the intention? And that should be the kind of the forefront. And then after, kind of figuring out what your price point is. And then number four, you know, just not updating, you know, the fuse box or panels, or you have exposed wiring. I mean, those are obviously going to be issues, not only with, you know, you just purchasing a property and have it in your possession, but, you know, insurance carriers notice things like that, and that could be a reason to not insure you. Number five, submitting claims that are more, you know, that are more maintenance related than a catastrophe. What I mean by that is that many people look at insurance like almost like a warranty, as anytime something happens, I just need to submit a claim and have the insurance pay for it. And that's, you know, it's obviously what it's there for, but you don't want to get, you know, claim happy and submit claims back and forth, because what ends up happening is not only do you lose a claim free discount, but also insurance carriers are going to look at that and say, well, this individual has submitted 6 claims in the last 3 years. Their propensity to submit more is high, so we're not going to take on the risk. You need to go somewhere else. So I always try to say that, you know, unless the claim you're submitting is a catastrophe and it's so much higher than your deductible, like say, for example, the roof caves in and your deductible is 10 grand and it ends up costing 50 grand. You know, I mean, I'm just saying on low numbers, right? That would be a reason to get a claim submitted. But if you know that it's barely above your deductible amount or even below, don't submit it, because even if a claim is put through and no money's paid out because you decide, actually didn't end up costing that much, you can still get penalized for just having a claim on your record. So it's always good to have a knowledgeable person kind of let you know that beforehand.
So is it, sorry, kind of to ask this question. So is it better to hire an outside adjuster, a claim adjuster, before you decide?
So it's better to actually have a, you know, like especially if it's a, you know, a roofing issue, right? Have a roofing company come and look at it and actually assess the damages and prepare an estimate. So then once you get the estimate, you can see, okay, Mark said my deductible is 10 grand. This company said it's going to cost $95,000 to fix this entire roof. And that's when I would say, yeah, okay, it's time to submit a claim.
Yeah.
But you know, if it's you know, lesser than your deductible, or even, you know, just a couple grand over, it's actually in your benefit to not submit a claim, because the rates can go up and you're stuck with that for, you know, 3 years, and it could be more expensive that way than just paying out of pocket for it, depending on how severe it is. And lastly, you know, for HOAs, looking at the CC&Rs to determine the unit owner's coverage, that's a huge one, very big one. Most of the time, nobody reads that paperwork because it's 80 pages long. So I get it.
200 pages long a lot of times.
Right. So no one reads it. But, you know, there are sections, and there always should be someone available to kind of explain, hey, what type of coverage, you know, do you guys provide from the HOA, you know, given that I'm the unit owner. And most of the time it's some type of like walls in coverage that you have to have, because they'll kind of cover the structure, like the roof and the, you know, exterior. So it matters, because you also don't want to over index on coverage on your policy when it's not needed. And claims follow the building, you know, not just the person. So that's something to keep in mind.
Not
You know,
just the person. So not the person, it's not just the person, it's the person and the building.
exactly. All right, how to prevent mistakes. So we just have to look at insurance differently. It's really here to protect your investment in the building and the revenue streams that you're looking at gaining from it. Um, Unexpected lawsuits constantly occur in California. So you don't want to end up having your personal assets exposed due to, improper coverage. I mean, because the worst thing that can happen is you say, well, why didn't you talk to me about that coverage? It was, $100 to add on. I mean, that's the worst conversation to have, on both ends. So prepare for it. All right. So likes and dislikes. What insurance carriers like? Um, they like properly maintained buildings. They like claims mitigation tactics like alarm systems, working smoke detectors, fire sprinklers, updated electrical HVAC, plumbing systems, updated roof if the roof is more than 60 years old. If the fire department is within a 5-mile radius, that's good. If the fire hydrant is within 0 to 1,000 feet of the building, that's good because they know that if fire occurred, they have easy access to water, it's close by, and they can mitigate that loss. Proof of insurance coverage for the past 3 or 5 years. If we're able to verify that you've successfully had insurance on the building, that's a green check mark for insurance carriers. Proper railing and handicap access. That's huge. And also the tenant occupancy has to be at least 85% or above. They want to see that, not where you have a building and half of it is livable and the other half is vacant. I mean, that's not normally a good scenario.
And this applies as well to retail and all the other commercial properties like office buildings as well.
Right, exactly. What we don't like, you know, the opposite, fire stations more than 5 miles away from the property, not easy accessibility from public roads, unclear usage of the property. It's like, are you doing Airbnb? Are you renting it out for 12 months? Is this a business? Are you having, business owners come in here and rent? I mean, what is it? That needs to be clear. Given the wildfires, heavily wooded areas with, dry brush, trees and shrubs, that could be an issue. Swimming pools that aren't enclosed, an old roof, again, lesser percentage of occupancy rates, and vacant buildings for more than 60 days. I mean, most of the time they know that if you, purchasing a property, once it kind of gets to that point of, everything's in, they know really it should only be vacant for so long. So, unless you can, unless there's like some type of extenuating circumstance that is allowing it to stay vacant, that's different. And then also, older buildings with no updates to building code standards, constructed in the last 50 years, that's a red flag if nothing has been updated. I mean, it's, they look at it as it's bound to fail. Essentially, same as if you have an old car and put in a new engine, we know it's going to run better. So the same thing with properties. The more updates you have, the better off and, less claims you're going to have in the future.
So, a question regarding like vacant properties. There are some properties maybe not vacant, but then they're vacant right now because they need to do remodeling. So, what would a person need to do if the property is going through a remodeling process, and maybe it could take like 4 to 6 months or even a year?
Good question. I mean, if the policy, in most cases, if the policy is already like active and it's not like a new building, then remodeling is, it's normal. But that would kind of be like an extenuating circumstance if it's a new purchase and you're deciding from that date that we want to update it. I mean, there are insurance carriers that are specific to covering vacant buildings that are being remodeled. So it just has to be clear on what's actually happening with the property so you have the correct type of policy given that particular scenario. So yeah, I mean that's pretty normal. It just has to be communicated that that's going on.
Got it.
So if you're on the hunt, some tips. Choose an insurance agent the same way you would a real estate agent. One, I always prefer a local agent. Obviously, if you're with a call center, that's in Minnesota, they're probably not gonna know and understand the same type of, graphs that Helen was just showing. I mean, they're just not gonna have all that same information at all. I mean, they can look it up online, but they're not physically here in the Bay Area. Um, so, having a local agent, you're familiar with the location, cost per square foot, and eligibility requirements. Two, on site, willing to be an on-site underwriter and visit properties. This was kind of the old way insurance agents confirmed if the property was in good condition or not. And I mean, to this day, I still do it because sometimes people aren't truthful, and you do want to physically look at the property to make sure that it's not falling apart. 3 years of experience. Experience in the industry matters, obviously, so you can tackle unforeseen underwriting issues. 4, education. It doesn't have to be just, oh, he went to college. It's just really the level and understanding and about insurance on a micro and macro level. And, pretty much, nerding out and knowing so much that you're just willing to display it to everybody. And lastly, how does your current agent present? Again, are they in a call center or are they in your neighborhood? I mean, presentation matters, and that will either make you feel uncomfortable or comfortable with choosing to go with that particular agent. To summarize, insurance is complicated and tedious. At first glance, it's a headache due to it being a requirement, and pricing could be a juggle. It's imperative that you establish a relationship with the tenured professional who you trust. Take the time to review the coverage to maximize your chances of a covered claim in the future. The current insurance market, similar to even real estate, is murky right now. So it's smart to have an insurance broker in your back pocket. Thank you.
Oh, thank you. And I cannot emphasize enough is that a lot of times our clients just kind of look at, okay, I'm just going to pick the quote that is the lowest without really looking into the coverage amount in terms of like what you're saying, the replacements cost. I had an insurance agent before who gave me a quote that was really attractive, but then when I look at it, the coverage doesn't even cover if my building gets burned down. And so it's really important to make sure because it does happen. I mean, even though it's only like 0.1% chance, you just don't want to risk that because if you are in that situation, it can be really devastating.
Right.
And I'm curious about also the liability issues because, again, obviously a lot of investors who are buying commercial properties, they also have to worry about the liability side because they have tenants in there, they have other people walking into the property. What should they know about those kind of policies?
I mean, every policy is going to have some type of, like residential is going to have, well, I guess homeowners, residential homes are going to have more like personal liability when it comes to like multi-unit buildings. There's going to be that liability, but it's going to be more of a, business liability use since it's more, because you're receiving income from the property. So there's always going to be that coverage there, whether it ranges from 100,000 to, most of the time it might go up to 1 million. But it's about, I look at liability coverage as protecting assets and your net worth, rather than just how much does it cost. So one way is to get, higher liability coverage on that policy. And also there is something called like a commercial umbrella that will go above $1 million. From one, I mean, to, 2, 3, 4, 5, 10, 25 million in some cases. And that will kind of cover above what you're limited at on the actual property policy.
Oh, that's a good segue to answer what is an umbrella policy, if you can elaborate on that.
Yeah. It's essentially just an access liability policy. So whatever, you know, policy you may have on a particular address, let's say you chose 500 grand, you get sued, it goes above 500, you're exposed because you're limited at that amount. And the umbrella pretty much just kicks in over that amount if that type of situation occurs.
So, on top of your own already like your own insurance policy, there's also another umbrella policy to protect any additional, um, I guess, like additional risk that you might have.
Correct.
And then, how often do you recommend somebody to buy that umbrella policy?
Constantly, to be honest. I mean, if we were in, Idaho somewhere with a population of 1,200 people, I probably wouldn't really talk about umbrellas too much. But in the Bay Area, I mean, people make a lot of money and own a lot of property. So I think that, most of the time, I mean, just based off your house, you're already worth $1 million. So having an umbrella is important, whether it's business or personal.
So why wouldn't somebody just increase their coverage on their original policy instead of having an umbrella policy?
Well, I mean, it depends. It that can happen where you just say, okay, I just want $1 million on my property policy and no umbrella. But once you kind of start adding in everything, like okay, you have a 401k, you have the primary house, you have the rental properties. I mean, it's all assets. So once you add it up, your net worth is X, and most of the time it's just automatically going to be over $1 million. So that policy is not going to cover up to the net worth. So then you do need that cushion.
Got it, got it. And Jose Monar said that I know we're in California, but what's going on in Florida? Insurance rates are skyrocketing. Is it because of the hurricanes or what? Do you know?
Yeah, I mean it's definitely all of the catastrophes out there. I mean the hurricanes, the flooding. I mean they're paying out billions of dollars to repair many of these places. So I mean you can imagine if you know, let's say on a dollar perspective, you pay in $1 for a policy, but then the insurance carrier is paying out 7. I mean at some point they have to raise the rates because they're literally losing money. Um, Plus it's state regulated, so you can really only increase insurance rates up to so much in a certain amount of time. So yeah, I'm sure all the rates are going up because of all of the claims that have been had in the last 3 to 5 years.
Yeah, and then it's just like before this past winter, the flood insurance probably not as expensive as after this winter time. Before winter, nobody really even bothered to look at flood insurance, and now all of a sudden everyone is looking at flood insurance.
Exactly. Earthquake insurance too. It's the same thing. As soon as that fault line gets hit, hey, do you guys do earthquake insurance? But then at that time, because it hit that particular fault line, if your house is near there, the price is going to be more. So
That's yeah, actually, I have heard from other insurance agents saying that it's not even worth it to get a earthquake insurance because the deductible is extremely high.
yeah, it's very odd. It's very odd. I mean, I only recommend doing it if you really, it's one of those when like if the house is paid off and now it's free and clear, like you're really protecting your investment. I think that's a good time to have it, but everybody's different. I mean, I knew someone that actually got earthquake insurance every other year, so he just like bet it would happen and it wouldn't happen one year. I mean, it was kind of strange. I never saw anyone do it that way, but it's because the deductible is so high and it's so expensive.
That's interesting, and I have to say that in my 18 years of career in real estate, I think I only know a couple of my clients had bought an earthquake insurance policy. I'm not saying it's right or wrong, but it's just like how interesting that very, very, very few people have earthquake insurance policy, even though we're living in California, just because of the fact that it's just so expensive and deductible is so high. So a lot of times they just feel like I'll just take that risk instead.
That's
Yeah.
true.
Well, thank you so much for all of the information. It's been so wonderful and it was very informative. I really appreciate Mark for what you've shared with us.
Thank you for having me, and I definitely appreciate everyone being here and spending the time out of their day to listen to us. So greatly appreciate it.
Exactly. And I hope that I will see all of you guys next month. And it's going to be another an hour and 15 minutes full of information, a lot of data for us to share with you. So I look forward to seeing you guys next month. Talk to you soon. Bye.